Welcome everyone to the educational stream of the week. So today's topic we will be discussing candle structure and how candlesticks work. So just a quick one before we get into this. Everyone just pop a 1 in the chat if you are here. Just hit me a 1 in the chat if you can hear me and everything's fine. You can see the stream. Sick. Cool. Sweet beans. Session is recorded for anyone that wants to know, anyone that is asking. We will be starting the session now. So candle structure, right? It's something that we spoke about a little while ago. And kind of, I think it happened in the VIP voice chat where if you can't hear anything, then you got to check your output volume. Yeah. Yeah. So we spoke about this a while ago, and I think we were in the VIP voice chat when we spoke about candle structure, and it's kind of just going into and dabbling into the world of how to take an entry, right? So understanding candles, understanding what happens in certain candles, what do certain candles mean, right? So for example, like what does this candle structure over here mean, right? What does this candle structure mean? What does this massive candle over here mean with this big wick, right? Going into it, you can kind of see that candles are everywhere. You trade candles, right? But majority of people just trade trend lines. A majority of retail will just trade a trend line like this, or will trade resistance like this, or they don't actually know what happens on within a candle and whatnot, right? So let's dive a deeper look into what's happening. And whatnot. I'm typing a message in the chat real quickly. So I just want to make sure everyone can hear me because everyone just put a 1 in the chat when they could hear me. So yeah, diving into candle structure. So basically, how does candles work, right? Taking a deeper look into it, we're going to start off from the very basics, right? I'm just going to remove this indicator off of this chart and remove my oscillator sandwich, and then we can have a look at candle structure. Right, I just want to make sure I'm on the right Bitcoin chart. Yes, I am. So taking a look at candle structure, starting on the daily, right? You can see that the daily candles give you different information, completely different information to what the 4-hour candles will give you, right? Versus the 1 hour, 30-minute, vice versa. You can keep going down to the 1 minute, even the 1 second chart if you really wanted to do that, right? So what do these candlesticks actually mean, right? Majority of people just think that the daily time frame will change the stochastic RSI, right? No, that's incorrect. So a lot of the times what people are taught as a retail trader is if you want to trade a longer term trade, you'll trade it on the daily. Like you'll look at the daily time frame, check the stochastic RSIs, check your indicators, check your EMAs, check your moving averages, check whatever you want to check, and then you'll take the entry on the daily. Matter of fact, that's not true. All right, the same daily trade can be taken on the 3-minute time frame, right? So the reason for that is because the charts and the time frames, all they do is give you price action at different intervals, right? So for example, what I mean by that is that a lot of the retail traders are stuck looking at indicators for price action, or they are stuck looking at a candle just thinking that it gives them information on where the price is at, right? So a candle gives us way more information than just what price is, or where price is, or how price is, right? It gives us information on what price did. Okay, that's the most important thing that you need to understand, is that candlesticks give you information on what price did within that candle, which can give us a lot of information than what you actually think. All right, so for example, if I just take this 4-hour candle over here that's printing, all right, let's take this 4-hour candle here. What does this candle mean? What is it showing us, right? So it's showing us that price started over here at the bottom. Actually, no, sorry, it started at the bottom of this candle over here. It then pushed all the way up to this trend line and then came all the way back down, right? And if this candle flips to the downside, that'll then indicate that price was tapping the trend line and rejected the trend line, right? But then again, if I go to the 1 hour, and I look at the same candle structure, you can see that it just gives us a different interval, right? This 4 hour candle is now 1, 2, 3, 4, so it starts down here, right? It pushed up to the upside. Now you can see this exact candle of rejection, right? If I go to the 30-minute time frame, you can see, oh, we had this big rejection, we pushed up again, now we're coming down again. Okay, cool, go to the 15-minute time frame. Then you can see more detailed price action. It's not just telling you where the price was at a certain time, it's telling you what price did within that candle. All right, does that make sense for everyone? One, okay, cool, perfect. So the way we can take a look at it, let me just make sure I'm recording the right screen. Yes, I am. The way we can take a look at it is that we can look at every single candle in this entire section and we can dissect what price did, right? But essentially, I'm going to break down the few things that you guys need to know, right? Let's go to the 1 hour time frame. Let's stick to this time frame here. Let's just dissect this area over here. All right, we're going to start with this candle over here, right? I'm just going to draw a nice little box around this candle just so everyone knows exactly what candle I'm talking about. This one over here. I'll make the full nothing, then I'll make the outline red, so everyone knows that this is the candle we're speaking about. Okay. Can anyone in the chat tell me what information is this candle giving us? Right, what does this candle mean? Like, what is it telling you? Does anyone know? When you type in chat, you can unmute your mic, you can answer. Doesn't really matter. Okay, open, close, and a wick, okay. Big wick push to the downside, okay. Rejection to down, okay. So, essentially, you guys are starting to like catch along what I'm saying, all right? Is that it's not just about, oh, price did this. It's kind of like, oh, price did this within an hour, which means something significant, right? So, for example, right, we have a trend line up top here. Right, a wick normally means that price has filled in this area. So this candle, once upon a time on the 1 hour, came up all the way to there. Right, it touched this area. Right, what does it mean? It means that price opened here, it pushed up all the way, rejected this area. So now I know on the 1 hour time frame that this area over here is offering some sort of resistance. Right, because this candle had a massive push and then all of a sudden came down all the way. And especially because this next candle is opening and printing red. Right? So whenever you see a candle that has a massive wick like this and then comes all the way down, it tells us that the buyers had the power coming up and it hit a level in which the sellers took over and started pushing it back to the downside. Let me meet someone here real quick. So it gives us that type of information of kind of who was in power and where did that power go. Right? Buyers took over, that candle opened green, pushed up all the way. Sellers then took over and pushed the candle down again. So it's telling me that in this area over here, there's going to be some sort of resistance, right? So kind of looking at like this area here is offering this chart some sort of resistance, okay? The same way that you can look at this candle over here, right? If I just drag this box to this candle here, right? You can see that this candle offers us a lot of information. It offered us the information that the candle opened over here, pushed down all the way. The sellers had all the power in the world, and then the buyers stepped in between these levels, right? And then it came up all the way to close green, right? It shows us that there's a lot of support in this area. There was a lot of buyers that stepped into the market, right? And then you can see it again over here. When price came back down to these levels, you can see the buyers stepped back into the market, right? So if I go down to the 30-minute time frame, you can see these candles, the same section of candles are just printed in with more detail, right? So you can see the exact candle that where it happened. You can see this candle over here was the candle on the 15-minute that caused that whole wick. I'm going to go down to the 5-minute now. We're going to grab a look, okay? You can see over here. Now you can see the exact point at which the buyers stepped in, right? So you can see the wick happened over here, right? So you can see the candle pushed all the way down, came up to close in this area, and that's when the buyers then stepped in on the next candle, right? If I go to the 3 minutes, or even the 1 minute, let's go to the 1 minute, see what it looks like. right? You can see over here, right? You can see the same information is getting given to us. Like you can see this box is the whole 1 hour candle, but this is all the information that it gives us on the 1 minute, right? It's candle structure. It shows us exactly at which point the market decided to dip and exactly at which point the buyers started to catch into the market, right? So the same thing over here, right? If I look at this candle that rejected this bottom line, right? You can see that the sellers were in control of this market, but as soon as it got back to this level on the 1 minute, the buyers stepped back in to close the candle to the upside, telling us that there was buying pressure. Whenever you see a candle with big wicks either side, for example, like this, for example, like this over here, where this candle pushes to the downside and comes up all the way, you can say that there are buyers or sellers stepping into the market, right? So over here again, you can see this candle pushing to the downside and coming all the way up, closing with this massive wick to the downside, right? Closing and then opening the next candle in a bullish manner. Basically the same candle, just it closed bullish, right? Indicating that there was buyers stepping in and there was some sort of support in this area over here, right? So that's what candle structure can give us, and it's very important to understand this because a lot of retailers don't know that candles give us way more information than just where the price is, right? It gives us information on what price is doing and how price is reacting at different levels, right? So now how do we use this in combination, right? So you can see that this level over here, I drew a line on it as soon as we came to this area and rejected it, right? Because we have this entire area where there's most likely going to be an order book just chilling. So you can expect price to come back down, collect the orders again, and then push up to the upside. But the problem with this is that we can't trade solely off of what candles are doing. Like we can't trade solely off of just rejection on candles, right? We need to understand that we need to wait for the candle to come down and close before we can take any orders, right? Because if a candle's printing, if I go to the 30-minute time frame, just remove these two lines. If a candle's printing, like you see how this candle over here, it's currently live. It's a live candle and it's currently showing me information, right? I need to wait for this candle to close before I can collect the information that it gives me, right? So for example, what do I mean by this? I'm saying that if you look at this candle here, right? This candle once upon a time was all the way at the bottom. It was at some point touching this trend line. And then eventually came back up to close up top here. So I never knew that this candle would print like this, and I never knew that I could have bought on this candle until it came up and closed in a certain manner. Like for example, right? This candle could be printing red right now, but until it goes up to the upside, until it closes, we don't know what's going to happen to it. Right? So this candle is printing live until this candle closes. Like this candle could close bearish. I could take an order on this candle right now and say, cool, that candle is going to go down. It's giving me selling pressure. But what happens when, because this candle's still got another 15 minutes left to print, right? So what happens if this candle all of a sudden decides to go to the upside and close up top here with a big wick to the downside, right? Indicating that it's collecting more orders to continue to the upside, right? That's why candle closure is always important, right? So that's why whenever you're taking a trade on like the 1 hour, the 4 hour, 15-minute, 5-minute, 3-minute, 1 minute, waiting for candle closure is always a thing that you should somewhat do depending on how you trade your own strategy, right? So what do I mean by that? So if we take a look, if I go to the 4 hour, and we take a look here, right? You see this 4 hour candle here? Do you see that once upon a time, this 4 hour candle was printing below this line? A lot of people were looking for sells because the candle pushed below the line, right? They decided, you know what, we're going to sell this candle because it broke the support. And look what happened. All the people that didn't wait for the candle to close got stopped out because the candle then came up all the way to close up over here. So it saved me, or it would have saved me if I traded this way, from taking a bad trade that would have gotten me stopped out, right? So would volume profile pick that transition? Not specifically, no. No. The volume profile just shows you the price that was traded the most in an area. And if a candle's currently printing, for example, if I go to Bitcoin now on the 1 hour, right? If I show you here, right? If this candle's still printing, and I do the fixed range volume profile, and it tells me that the most traded price is up here. If this candle's still printing and comes up higher or goes down lower, this might change the fixed range volume profile, right? So you always go wait for the candles to kind of close. That's why it's important, right? So another thing that's quite important over here is that if I go to the 4 hour time frame, actually wait, let me go to I think it's the 30 minute. What time frame was it on? 4 hour. Yeah, it was the 4 hour. You see how this 4 hour candle has not yet flipped to the downside. This candle has not flipped to becoming a bearish candle yet. Right, you can see that on the 4 hour candle, this looks completely different to the 1 hour candle that's printing there. Right, the 4 hour candle gives us a different view on what's happening on a higher time frame. So, for example, on a higher time frame, we have this 4 hour area of resistance there, this trend line basically of resistance. Price pushes all the way up, touches the trend line, comes down. If this candle flips into a bearish candle over here, if this candle decides to flip and turn red and start pushing to the downside, it's giving me a strong indication that there's a lot of sellers stepping into the market. Not just at these levels, but just on the 4 hour time frame. Right? That's what we call a candle flip. Right? When a candle starts off in one direction, but then flips all of a sudden to become green or red. So in this example here, you can see this candle opens and starts pushing to the downside. Right? If this candle flips green and starts pushing higher, it's giving me an indication that buyers are stepping into the market on the 1 hour. Right, so it gives us more information than just what is price doing. It tells us what is happening in certain areas and how much people are getting in and out of the market. Right? So essentially what you need to look for in certain areas, like for example, if I wanted to buy this trend line, I would wait for price to come down to the trend line, sell, like completely sell off, and then show me that the buyers have stepped into the market. Right? So that's what this wick is giving me over here. Right? This wick over here is telling me that the sellers try to take control and sell the market to the downside, but then the buyers stepped into the market and closed it above the trend line. And that right there could be an indication for a nice buy opportunity. Right? Boom, I don't know where you want to TP to, TP the next high or something, the previous high, like that, and boom. But the thing that you need to understand is that everyone that's trading the smart money concept strategy is that you can increase your win rates and increase your confirmations if you only just wait for a candle that prints correctly, a rejection candle, or a candle that's showing you that there's going to be buyers or sellers stepping into the market, right? So it's kind of what you're looking at. You're looking at candle structure, not just looking at price or volume. You're looking at how many buyers were in the market, how strong were sellers before the buyers stepped in. You know what I mean? It shows you a lot of information with what goes on in the markets, right? Is there any questions regarding this so far? Good, thanks yourself. Yes. Cool. Cool. I'm just gonna flip my stream over to another page. I think I'm gonna go, wait, is this my, yeah, I'm gonna come to here. And flip the recording over as well to stream another thing. Here we go, boom. Okay, so a couple things I wanna go over. Really good website that you guys can check out. Just wanna make sure that everything is streaming properly. Yes, it is. Really great website that you guys can check out if you really want to is babypips.com, right? So babypips.com is a website that I don't use personally to this day because it's very beginner level stuff. And when I found out about it, when a friend of mine told me about baby pips, I was already above the level of trading than what baby pips could give me information on, right? Um, it's basically a website that gets traders to learn the absolute basics before they get into trading, like understanding not just trend lines and moving averages, but just understanding how to use the Fibonacci retracements, the Japanese candlestick cheat sheets, like cool things like how to measure volatility, like how you do that. A lot of people don't know how to do that. A lot of people don't know that there's a chart that we use to measure volatility. And I just went in. Sometimes what I do is I reference baby pips sometimes, just to make sure that I am on the same page with everything else, and whatnot. So let's check it out, right? So candlesticks. I just literally Googled candlestick patterns and I went over a couple of these. There's a great few pages on here that you guys can go do some more research on if you really wanted to do that. But simply put, there's like a couple basic candles that you need to understand that give you the most type of information. And on this page specifically, it is the hammer and hangman, right? So I personally don't call these the hammer and hangman anymore. I just see them and know what they mean. But essentially, what these mean is like a hammer or a hangman candle shows us that price over here. This is going to be a bearish candle. Price opened, pushed all the way to the downside, and then the buyers stepped back into the market. But the buyers couldn't take control of this candle. The sellers were still in control once the candle closed. Right? Understanding how candles close gives you a good indication of who's in control of the market at the time of that candle printing. So for example, right, the 1 hour time frame candle can close bullish, indicating that yes, the buyers are in the market. The buyers have current control. But at the same time, the 4 hour candle at the same time could close bearish, showing you that there's actually sellers that are in control. Right? So a higher time frame down move on the 4 hour, if you go to the 1 hour, it would be a lower time frame retracement to continue to the downside. Right, the same way over here, this is literally the opposite candle, which is called the hangman, closes green, where the candle pushes to the downside, but then closes bullish. Right, so the candle opens, pushes all the way down, the buyers step into the market, but the buyers then take control of that specific candle and that specific time. Right, so you can see there's two examples over here. The hammer candle used at the bottom of a downtrend to indicate that this was probably going to be a liquidity grab, where they collected all the orders and the buyer stepped into the market, closed the candle bullish. There was probably a lot of volume in this candle as well. And then after that, you have boom, boom, two green candles, and then the market probably continues up after that. Right, the same way you can use the hangman, right? Sellers took control and pushed it to the downside. Buyers stepped in, but the buyers couldn't take control of the candle, couldn't take control of the market. The sellers still had the advantage when this candle closed red. And then you can see the market then reverses to the downside, right? So the hammer is a bullish reversal pattern that forms during a downtrend. It is named because the market is hammering out a bottom, right? So you can see here, market's hammering out a bottom. So when the price is falling, hammers signal that the bottom is near and the price will start rising again. Okay. The long lower shadow indicates that sellers push price lower, but buyers are able to overcome the selling pressure and closed near the open. I've not read through this page at all, but that's exactly what I just said. I just literally scrolled through this to see if there was pictures, and that's all I needed. I just needed a bunch of pictures of what these candlesticks look like. Didn't know that they have the same explanation. Just because you see a hammer form in a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it's safe to pull the trigger. Right? That's exactly what I was just going to say. You cannot just base a trade off of a hammer, right? Or a hangman or a specific candle. Reason for that is because if I come down over here, right? I'm on this time frame over here. Let me actually go and double check this. Let me see. Let me see. So this hammer candle where it pins to the downside and closes bullish should tell us that the market moves up. Oh, but we see over here on BNB, we have this candle here, that does that exact same thing. It pushes to the downside, comes up and closes bullish. What do you see after that? The market retraced to the downside, right? What does that mean, or how can people get confused with this? Is that you cannot trade one strategy alone. You cannot just look at candlesticks and take trades, right? You cannot just look at market structure and take trades. You cannot just look at the stochastic RSI and take trades. You cannot just look at supply and demand and take trades. You cannot just look at the Fibonacci retracement and take trades. You can't use one thing alone to take a trade, right? The reason for that, like in this example over here, is that we have this area where markets are ranging, and then we have a candle that pushes down, closes to the upside, right? But if I go to the 4 hour, you can already see now, if I take market structure into account, this market's already overbought, right? This market's has been pumping for a while now. So this market's heavily overbought. So why would I take a buy at an area where the market's already overbought, right? So on the 4 hour time frame, this market just moved all this way up, right? And it started consolidating. Why would I take a buy? Right? Oh, because I'm going to miss the move to the upside, but there's no other confirmation. Right? There was no initial pullback to take a buy or sell. Right? So in this example, the market was already overbought. It was already pushing away to the upside. A retracement was expected. And then you saw a candle like this and took a buy. It goes against the trend. It goes against basically anything. Because if you looked at any other indicator, any other market confirmation tool like market structure, Fibonacci, or RSI would tell you that this is way overbought. Market structure would tell you this is way overbought. Fibonacci would tell you to wait for the retracement to continue back to the upside, right? So you cannot use one without the other. You cannot use one alone. If I go to the daily time frame, you can see over here, even here on the daily, you can see this market's way up. Right? It's had a massive push to the upside, and you want to buy again over here. So it's not very smart. Just want to check something here real quick. Okay. All right. Let's go back. Let's try and read some more. So the recognition criteria for a hammer, right? The long shadow is about 2 or 3 times of the real body. Little or no upper shadow. When they mean shadow, they mean wick, right? The real body is at the upper end of the trading range. The color of the real body is not important. And then you got the hangman candle that goes through, right? I'll send this link in the chat. Just a quick one. You want mid-aged pip now? Wait, what? Am I? No, I'm not. I'm still on babypips.com. I'm so confused. Oh, I'm on mid-aged pip. Oh, that's where I am. Oh. Thought you're genuinely asking me that and telling me that I'm on the wrong website. I'm on mid-aged pip now. Yeah, I mean, more or less. There's the link to this hangman and hammer candlestick patterns if you guys want to go do some more research on it. Another one here is important to understand is dual candlestick patterns, right? So whether you have 2 candlesticks gives you information on the market, right? So understanding candles is not just understanding one candle, but understanding what 2 candles together mean, right? So one candle can give you one piece of information. A candle next to it can give you another piece of information, right? If you take this candle over here, this structure over here, right, this area here, I'm just going to use these 2 candles over there. I'll make this nice and red for you, so you can see exactly what I'm talking about, that over there. So what can we see? Right, we can see that there was a massive expansion to the upside, breaking a high. Right, so this candle over here made a higher high. Then the next candle opens, pushes to the downside, but only falls out about half of this wick. I mean, half of this body. Before the next candle opens and goes higher even more, pushes even further higher. Right, the smart money trader will then look at this and say, oh, this went along and filled the imbalance. Right, there was imbalance sitting here. It was kind of sitting there, right? So you have this imbalance sitting over here, and this candle, this red candle, then just comes and fills the imbalance, opens the next candle, fills it more, but closes above the imbalance. That gives us a lot of information. That gives us information on we tried to come down, we tried to print 2 red candles in a row, but then market came up, closed above this area over here, closed above this area of imbalance, right? So the market pushed down all the way, came up, and you can see this is an interesting thing again, is because this candle opened over here, exactly where my mouse is right now. Is that's where the candle opened. Okay, then this candle most likely started pushing to the downside, came all the way up and flipped into a bullish candle, indicating that that was a liquidity grab. Right, so candle flips are also important. Adding 2 candles, looking at 2 candles together, are also very important, right? So you can see this candle over here pushed to the downside. It's about to flip to the upside, indicating that this price can still go more up, further to the upside, right? Moving on. So engulfing candles. There are 2 types of engulfing candles. You get bullish engulfing and bearish engulfing. Does everyone in the chat know exactly what a bearish and bullish engulfing candle is, so I don't have to go over it? Okay, cool. Perfecto. Okay. I hope you guys know what it actually means. I'm going to go over like 1 or 2 things here. I'm not going to explain to you how it looks because everyone knows what it looks like. But let me explain to you the meaning of it, right? So basically it happens when a bearish candle is immediately followed by a larger bullish candle. That's a bullish engulfing, right? This is the second candle. This is when the second candle engulfs the bearish candle, right? This means buyers are flexing their muscles and that they could be a strong up move after a recent downtrend or period of consolidation. On the other hand, the bearish engulfing pattern is the opposite of a bullish engulfing pattern, right? But once again, you can't just take a trade straight off of a bullish or bearish engulfing pattern, right? You can see over here, here's a great example. This candle over here, this red candle, engulfs this green candle. It is bigger. It closes bigger than this candle. You cannot take a trade solely off of that because you can see the market still pushes up. Because of market structure and because you know that the daily time frame is already overextended, you know that buying into this market is not very smart right now. Even though selling into this market isn't very smart right now because we don't know where the market is going to go yet. It's just consolidating. It's in a no man's land right now. I wouldn't take any trades right now because this market could spike really hard to the upside, or it could print a candle telling us that it's going to go down and then shoot up, or print a candle telling us it's going to go up and then shoot down, right? Forcing people to take sell positions when the market's actually going to go up, or forcing people to take buy positions when the market's actually going to go down, right? So you have to be smart about it, right? So the market will tell you what it's going to do, but you also need to understand that the market will tell you what it's going to do, but 1,000 other people are looking for that exact same candle to print to enter a position, and the market makers will then go, oh yeah, we've got this many people going short, let's just push the price higher, or you've got this many people going long, let's just push the price down now, right? So let's go back. So you get something called a tweezer bottom and tops, right? Never heard of these, never used these in my life, but these are patterns. I'm about to learn something new as well. So here we go, let's learn something new together. So this type of candlestick pattern is usually spotted after an extended uptrend or downtrend, indicating that a reversal will soon occur. Okay, let's go to Bitcoin real quick. Let's go to the daily. Oh, it looks like we're printing that right now. Okay, it looks like we're printing these tweezer, this tweezer pattern. So let's see what it looks like first. Let's see what it looks like. So it looks like this. So you have this, if we're looking for the tweezer top, so you have a bullish one and a bearish one. Not quite, because this is a doji. So this isn't quite a tweezer pattern. Right, there we have a doji and another doji, right? But what does this mean? There are 2 types of tweezers. You get a tweezer bottom and a tweezer top. Nice, cool. Notice how the candlestick's form looks just like a pair of tweezers. I mean, look at that, kind of does. The most effective tweezers are followed by, the most effective tweezers have the following characteristics. The second, can I speak? The first candle is the same as the overall trend. If price is moving up, then the first candle should be bullish. Okay, we see that over here, bullish candle. The second candle is opposite to the overall trend. If the trend is moving up, then the next candle will be bearish, right? So the shadow or the wick of the candles should be equal or near equal length. That's interesting. I did not know that. So there you go. You got tweezer tops and tweezer bottoms, candlestick patterns, right? Over here, let's check what we have here. Candlesticks with support and resistance. This is quite important. As you can see, I'm going to zoom in a bit more so you guys can see it. But over here, in this lesson, we'll be looking at the basic Japanese patterns that have been discussed, right? So essentially, what they're going over in this section over here, I'm just going to share this page with you as well. If you want to go and check this page out, then I'll share the last page with you as well, if you want to go and check that out as well. But essentially what's happening over here is they're basically telling you that there are support and resistance levels that can be monitored by price or by candlesticks, right? Because the candlesticks can tell you when buyers and sellers are stepping into the market, right? It's not just volume that gives you that information. It's also price or candles, right? You can see over here, I'm going to zoom in more. You can see over here, we reached that level of resistance. So we had candles rejecting this area, right? We come up again and we reject it again. And then you can see once we reject that, the next candle prints bearish, you take a short, and then all of a sudden, boom, price is coming down again. And there's a nice car for everyone, matching jet. They're basically saying that if you trade this strategy, you'll be able to get a nice car and a nice jet. That is probably a no-name car and a no-name jet. You can buy this on Pick and Pay. So yeah, it's kind of what you're looking at. But you see over here, this is very important as well. You see a hammer buy, question mark, stopped out. Evening star sell, stopped out again. Right, doji buy, stopped out. Right, you see how candlesticks alone is not important enough or not giving you enough bias to take a buy or sell. You need to understand market structure. Where's the areas of resistance in the market? Where's the areas of support? So it's only good to start using these patterns when you can see areas of support or resistance, right? So you can see over here, that candle that printed there was a good candle to use because we actually came up into resistance, right? Does that make sense? I hope it does make sense. It should make sense. So yeah, that's kind of the understanding of what candlesticks are. What you could also go and do is you could Google a bunch of candlestick chart patterns and then just like look through them, start understanding them, start looking at what candles do in certain areas. Like if you backtest, right, look at what candlesticks you want to look for. Like if you backtest a strategy and you want to buy or sell certain areas, like let's say you want to take a buy over here somewhere, right? Don't just take a buy off of what you see. Take a buy and say, what did the candle do? Where did it open? Where did it push till? Where did it close? Right? Because understanding this, next time you see this in a market, you'll go, oh yeah, that's an easy buy. Right? Or you can say, oh, that's an easy sell. Like here as well. Right? You see the liquidity build up. You see the support area. You see the big push to the downside and a rejection of the support area. Price couldn't break this level. Price couldn't close below this level is a better word to say. And then we pushed up. Easy buy. Boom. Market pushed up to the upside after that. Right. So using candlestick patterns or just candlesticks alone in combination with supply demand support resistance becomes a helpful tool in helping you take better entries, getting better entries. And if you get a better entry, if you have more confirmation, you sleep better at night knowing that your trade's going to sit well in the market. I'm going to open up the conversation to questions. Is there anyone that wants to ask a question regarding the chart patterns and candlesticks? Yes. This area here. Wait, say that again. You would wait for candle closure. So for example, this area here is going to be the bottom until price breaks it. Right, so this area is the initial area of support until price decides to break below it. But you can see here, price never closed below this level. If price came down and closed below here, if it came down to this area here, I would delete this zone immediately. Right, so you can see that price pushed down but closed above this line every single time. So indicating to me that this area was like a proper support area on this 1 hour time frame. Okay, so if I go to the 30 minutes, you can even do the 15 minutes. That's going to be a little bit more difficult to see, but you're saying, why did I take this area instead of this bottom area here? Right. So the first tool I used was the fib. As you can see, it bounces perfectly within the fib level. Right, so I'm not just using supply and demand. I'm not just using order blocks to mark off my zones, because it's just not enough. Right, I can't just use liquidity and an order block, because like you can see over here, that price has already tapped into this order block over here. We can see here, this was the block that made this change of character. So this was the block that made this change of character over here, right? So we had a chalk to the upside. Right, so then price decided to keep moving to the upside, and it made another break of structure here. So essentially, if price comes down to this level, we've made a lower low over here. So we don't want price to make lower lows. We want price to keep going up. Right, so what you would look for in this example here, because this order block here made a higher high and we came and tapped it immediately, which caused another higher high to print off of that. I don't want price to come back. I want to look for a level that's just above it, which is this level here. Right, so then I'd grab my fib and I say, okay, cool, that was the high, this is the low. There's my fib zone. And if I go to the 30-minute, you can see on the 30-minute time frame that zone offered a lot of rejection previously. We had this candle here, we had this candle here. We broke below it, came up and found support on it again over here. We went up, found support again here with this candle, and again with this wick over here. So this area in this example is offering me a lot of support. Right, I'm not saying that every time you take a trade you should look for a setup like this, because every trade is going to be different. Every setup will be a different setup than the previous one. It's not going to be the exact same. But in this example here, price moved off of this zone, made a higher high, tapped it immediately, made another higher high, and then we came lower to an area of support, which is this zone here where candles were rejecting off of the whole time. And then that's where you could have taken your order. And if you go to the 15, you can actually see much better candle structure in the side of this zone. You can see a perfect example of where price tapped into it, rejected it and closed above, tapped it again, rejected and closed above, and that on the 15-minute, that could have been the entry. You could have waited for the close of the candle maybe, take the entry, stop loss bottom of the wick, and then riding it to the most recent high, which would be this high here, and then the trade would have cleared over here for 5-1. Right, so that's how this trade was taken. It wasn't off of the bottom zone, because the zone had already been mitigated and made a higher high. An order block is only ever valid for multiple touches if we haven't yet made lower lows or lower highs. So for example here, if price moves up and comes down, right? If it just starts ranging and taps it and starts ranging and taps it and starts ranging and taps it and starts tapping it and ranging inside the zone, it will remain valid. It'll always remain valid until you've made a significant lower low, right? Tapped it again and then made another one. That's when you don't want to come back. If you've made two, I'll even delete this. This looks a bit messy. I'll show you again. I'll show you again. I'll explain it again. If you have an area in which you have a supply or demand zone, right? In this example, it's a supply zone. Price rejects off the supply zone, right? And makes a lower low. So price rejects the supply zone, makes a lower low. If it comes back, great, take the order. But if it makes another lower low, it should not come back to the same level. It should come back to an order block or a supply zone that is slightly lower. Right, so this candle over here, this area here where we had this and made a lower low, that would have indicated that this supply zone is valid. So as soon as we make a lower low, over here, you can see that was the change of character there. This would have told me that this supply zone is now valid. We come all the way back into the supply zone, tap it, make another lower low. I don't want to be in the supply zone ever again. We shouldn't come back to the supply zone. Once we've made two lower lows consecutively, we shouldn't be there again. We should stop somewhere here. Because price shouldn't be making a lower low and then a higher high. You know what I mean? Does that make sense? Cool. Just like that. Cool. And we had a bust down. So price should not come back into this zone. It should stop somewhere here. And then you can see that there would most likely be a supply zone here somewhere. Something like that. Right? Because as soon as we make a lower low, again, as soon as we print that second lower low, my stop loss over here is at break even. Instantly goes to break even because we shouldn't come back up. So at that point, we're just building liquidity to move in the other direction. What's Bitcoin doing? Chilling. 12 minutes till this 1 hour candle closes. So yeah. To me, that looks like Wyckoff. It is Wyckoff. It looks exactly what it is, but I can't explain that because people get way too confused. You entered at the second touch. I entered at the red line. I entered the red line for this example here. So I didn't enter the first touch. I entered this one over here. Stop loss below the wick. Like that. I did not enter the first touch here, no. Didn't do that. And there wasn't a specific reason, I just missed the entry. I didn't want to have my trade start here, stop loss below the supply, because that would have only given me a 3-to-1. So I was like, yeah, you know what, it's not worth it. So I waited for a better entry. It was over here. It was on the 50-minute over there. But then targeting the high. Like that. Like that. When the candle closed, yeah. So I was in the 15-minute with this, and I think it was a 15. I should check the 5-minute as well, because I know what the candle looked like. Don't think it was a 5-minute though. No, it wasn't. Could not have been. No, wait. No, it wasn't a 5-minute. It was a 15-minute. Yeah, it was this candle. It was this candle here that I took the trade on. I waited for the candle to close, opened the trade as soon as the candle closed. Stop loss below the wick, small minor, stop loss 0.68%. Riding the trade to the most recent high over there, securing myself a 5.85 risk reward, which I was happy with. Awesome. Sweet, sweet, sweet. Any more open up questions? I'm just reminding you guys that the weekly breakdown will start at 5 p.m., which is going to be in about an hour and 10 minutes from now. That's when the weekly breakdown starts. Because if there are no more questions, then I will give you guys 10 minutes to ask any other information. And then I'll probably end the stream off, going to make some food, and then I'll be back on for the weekly analysis. The weekly analysis will go from 5 till... Depends. I can be on till about 6:30. Then I've got to do some other stuff for the week. Got to get the stuff ready for the week. But, yeah.